Welcome. Give me a sign in the chat window that you can actually hear me this week. How about that? There's Juan. So far I show Juan and Paige and Steve and Kat, Sydney, Vanessa, Drew, Ishan, Megan. We can hear you. Yes. Good. Nick, Cameron. All right. Everybody is coming on board. That's great. That's great. Wow, I've got a packed lineup today. What set me off this week, and I hope you've been able to at least go watch the video that I did, where I reviewed everybody's where everybody got their information from, because what I do, if you don't remember what I said and what I reviewed in that video, was I go look at them and find one that, gives me either some heartburn, or one that I don't agree with, or an article that is, hits my fancy in some way. Kilron, you're here. Good, I saw your name there. So it's good when I can go ahead and jump into an article and sink my teeth into it. Well, I sunk my teeth into an article this time, big time. And I based the entire night on this one article and the path that it took me on, because I want to share that with you. So I appreciate, oh, no 3D this time. Okay, Seth. Okay. So what I'm going to do is I'm going to show you the bunny trail that I went down, so that you can kind of learn along with me as I explored the article about the UK and how the fund managers in the UK are trying to get permission to use blockchain recorded funds. So I'm going to go ahead and start with that article, and I'm going to head down the bunny trail. So let's get started. I have lost my chat window, Robert.
You put something on top of it.
Yeah, I did, didn't I? How do I undo that? I can't, can I?
Not with a full screen presentation, no.
Okay, oops. Can you slide on over here and put the chat window over this monitor right here underneath the camera?
Sure.
And then go ahead and scroll wheel it to a size where I can actually read it. Robert is with me today. He's not stuck in traffic. And I am so grateful, because he can fix these little things that we see coming up. I forgot, because I was going full screen, that there we go, and pull that on down. Because I was going full screen with my PowerPoint presentation, that I couldn't actually see the chat window. So either I've got to have Robert reading interesting things to the chat window, or make it larger. So he's gonna go ahead and make it larger, and I can actually read it, because I'm reading it from across the room. All right. Okay. Robert, stop playing around with my chat window.
Well,
there it is.
It's not going to work because it's still a presentation, so it's going over here for you.
Okay, it has to go over there? That's fine.
Yeah.
Put it over that monitor. Okay.
Okay, stop fighting with my mouse.
Okay. So let's go ahead and go. I'm ready to go. So here we start. We're going to start at the top corner up there with the UK. And I'm going to kind of head down the circle following the arrows, and we'll end up with Stellar at the very end, as actually we'll end up with CIPS, and I'll explain what that acronym is before we're done. Okay, so UK is where we're going to start, and what we've done, the UK managers lobby for approval of blockchain traded funds. This is the article that got me going today. So, Britain has kind of their own asset management group, just like the United States does, and they have their own similar entity like the SEC that allows you to do certain things with investments and not do certain things. And so what's happening in Britain is they're applying to their equivalent of the SEC which they call their financial conduct authority, so that they can be able to trade funds. And instead of recording it in a traditional way, they want the ability to use blockchain technology to record the transactions that are happening. So they're pushing the government to establish a new class of fund employing blockchain technology, highlighting how financial firms are now tapping into this kind of technology so that they can be able to make things faster, better, and easier to accomplish. So it's what they call the Investment Association that represents this group of fund managers, and they're calling on regulators to approve blockchain traded funds. Now, what happens is on the blockchain, they issue digital tokens that represent shares in these funds. It's totally typical that when you invest in a fund, you have a certain number of shares in the fund, and those shares now are going to be recorded on the blockchain, and the blockchain then is going to be connected to an application eventually that users will be able to log into their application like you would with Morgan Stanley or Fidelity Funds or any one of those places that usually have a web presence, and they have a mobile app that you can get into and look at the balances and all that stuff. So all this is going to do is it's going to record what data and information is available to the user concerning the things that they are responsible for. In other words, they've invested in a fund. It's going to show them how much they've invested and what the value of their current investment is. So hopefully these blockchain traded funds, or sometimes they're called tokenized or on-chain funds, will be rolled out as early as the end or the second quarter of 2023. So hopefully they're going to get regulatory control before the end of regulatory approval before the end of this year. And once they get that regulatory approval, then they can move forward. So this is kind of what started me on the bunny trail. Now, this same article then, let's introduce Franklin Templeton, our next stop on this chain that we're going to go down. Now, Franklin Templeton was referenced in the last article about the UK seeking approval because Franklin Templeton was already well down the path to start doing this. So they planned to have mutual fund tokenization, and they were going to put it on the Stellar blockchain. Now, Stellar is just another cryptocurrency that is out there. It's a blockchain that's a lot like Ethereum. So what they are going to tap into is the Stellar's ability to record transactions, issue a token representing the transaction and representing the data about the transaction, and be able to have it available on a distributed ledger technology for the back-end system. So what it plans to do is move all of the ownership records onto the Stellar blockchain. It says in the future, the best article I could find was in 2021, so they're probably a little bit further down the road on this journey than what I'm able to share here. But Franklin Templeton is obviously seeking to modernize their offerings by creating a digital track record on a distributed ledger that will record all of the shareholders' funds. Okay? So we go from here, and in that same article, it turns out that what they do at Franklin Templeton is based on the underlying technology of the Calastone data that they're using now. What was interesting is I had never heard of Calastone, and so I want to share with you the research that I learned about this company called Calastone. And what it is a company that back in 2019 already launched a blockchain fund management platform. So what is happening is Calastone has a blockchain platform that manages the information about the funds. So everything I've been talking about from the UK to Franklin Templeton is already being done at Calastone. So it calls it the distributed market infrastructure. It helps up to 1,800 clients currently to manage transactions in the mutual fund sector. So here now we've traced it from the UK wanting to do it to Templeton already well invested in it to Calastone being the one that's actually providing the service itself. The UK company, that's interesting. This company happens to be embedded within the UK. No wonder the UK fund managers are asking if they can utilize this technology. They currently save the industry 3.4 billion euros, or actually pounds. Sorry, the symbol is a pound there, or about 4.3 billion total dollars. It is the technology that underpins all that the other fund managing companies do that participate in there. So it claims that it's the largest use of distributed ledger technology in the financial services sector. Well, we'll see. And I'm sure if they're one of the first people that jumped out on this technology, that they're probably pretty well solid in their statement that they're the largest, and they'll keep that first mover advantage that you get when you're usually the first to use a new technology. So let's take a look at that technology real quick. While Franklin Templeton was looking at the Stellar blockchain, the Calastone company used the Ethereum blockchain. So they issued a new token on the Ethereum blockchain, which is what Ethereum's meant for. Just like Stellar, you can create new tokens on the Stellar blockchain as well. So they used what they call proof of authority, and later on other videos have information on what different kinds of consensus mechanisms, that's what they call proof of authority, is a consensus mechanism on a private permissioned network. So we're literally talking about a business blockchain here. Everything that we've been talking about in this blockchain genre of business blockchain. So they're going forward with choosing Ethereum. In this case, they went forward with choosing Ethereum. At that time, it was the most mature that they had to offer. That's what they originally platformed for. But Calastone wants to be agnostic in blockchain networks. In other words, they don't want to be beholden to just the Stellar network or some third-party network like Ethereum, where Ethereum could make decisions that might be adverse to it, or even Stellar could make decisions that are adverse to their network here at Calastone's network. So they want to be agnostic, so they're looking at Hyperledger Fabric, which is the same technology that's used by IBM when they issue their blockchain technology to various companies. So there's the technology. That's what Calastone is doing. Now let's go ahead and move on to our next subject. So what about Stellar? What about Stellar? Now Stellar is a network, okay? So on the Stellar network, the coin that is used in the Stellar network is called the Lumen. So the Lumen's three-letter acronym is XLM. It is a distributed blockchain-based ledger and database that facilitates cross-asset transfers of value. So they don't necessarily have to transfer just dollars and cents or pounds or euros. They can transfer other items of asset to transfer ownership of items of value from one owner to the next owner, okay? So Stellar can also support other tokenized assets, which I've also intimated in other videos. So it can support a lot of different, what they call not native or created coins. It's a payment network, okay? They use what they call the Horizon API, or Application Programming Interface. That's how you clue into making those other coins that you want to. And the Stellar core coding is what you're tapping into with the Horizon API. Now, all of these are overseen by the Stellar organization, which is at stellar.org. So other tokens can be created on the Stellar network. So, it's a competitor really to Ethereum, but Stellar was specifically focused, instead of being a one-stop shop for any type of coin that anybody wants to develop, Stellar's focus really with the Lumen is to be a payment system or a asset transfer system. Okay, so you can have a tokenized version of a fiat currency like a stable coin, such as what we've talked about. Tokens can be issued, exchanged, transferred through the Stellar network. Now, Stellar is one of the only other choices for what they call ICOs, or initial coin offerings. Now, initial coin offerings were really, really big when Ethereum first started making them available. In fact, a lot of people abused them, similar to the way that NFTs are really being abused today, with people cookie cuttering out a whole ton of NFTs to try to make a whole bunch of money. And the NFTs may not, in fact, be worth much. We're looking for that market to settle down, but ICOs can still be offered on Stellar and Ethereum. So that kind of makes it nice if you're trying to develop a blockchain that is focused on a new investment scheme, that you need to have money in order to bring it over the top. Just like starting another corporation when they do an initial stock offering. In fact, the Trade Commission has said that ICOs need to be treated exactly the same as initial stock offerings and treated as investments. Because people, if it looks like a flower and smells like a flower, it's probably a flower type of thing. So they're going at ICOs as though they are actual investments in a company or a new project, and therefore, since there's potential for loss and a potential for gain, that they're just as the same as an initial stock offering. So that's what an ICO is. So like Ripple, Stellar can handle exchanges between fiat-based currencies and between other cryptocurrencies. They have very low fees, and we'll talk about Ripple also in another video, but very, very low fees. And in fact, these fees are so low in comparison to Bitcoin that they're not even in the same league. The whole idea of the Stellar network is to have a very quick network that transfers very, very fast to its destination, so that it can be used as a transfer medium. So the third bullet point down there, that it has fast transaction speeds that rival what the Ripple network can also do. It is secured via the Stellar Consensus Protocol. So it's their own unique consensus protocol that allows it to be quick but secure. So, and it's secured through a decentralized network, and with that many transactions and small block sizes, they can close blocks and get it encrypted and have a long chain of blocks before somebody can really hack into it. And that's the whole point of the kind of speed that's developed there. Okay, so that's what Stellar is all about. So let's look at Ripple now. We've talked a little bit about Ripple in comparing Stellar to Ripple, and Stellar's being used by Calastone and, mentioned in Franklin Templeton. So Stellar's being mentioned a lot, but what about Ripple? What is the deal with Ripple? Well, Ripple was actually Ripple Pay clear back in 2004. And if you're familiar with the history, 2004 is actually 4 years before Satoshi Nakamoto came out with Bitcoin. So back then it was not a blockchain-based network, but it was a payment network that the person who started it wanted to morph into a worldwide network that could actually, work to be a competitor against a thing called SWIFT and other payment networks that were popular in the area. So it was focused to, compete against PayPal and those kind of folks. So it is described as a cryptocurrency. Its call sign is XRP. The purpose is just simply to provide quick transactions one party to another. It's not meant to be sold as an investment. Okay, so the value really hasn't gone very far since it first came to be. I think the top value has been about $3.30 and the lowest value has been $1.50. I mean, it just hasn't moved and has stayed very, very close to a certain range. And the whole idea with Ripple is that it's meant to try to keep a range. It's not tied to anything, but they don't want it to all of a sudden become the latest investment trend and have the market makers start manipulating the value of it up and down. So it serves as a middleman between two parties in a transaction, serves as a trustee so that it can make quick transfers and quickly verify the exchange has actually happened. Okay, so whenever traders make a transaction using the network, a small amount of Ripple is taken. Now, the value of Ripple is about 2 to 3 times more than Stellar, and so you see that it's twice the amount of transaction fee, 0.002, but it's 0.002 of a larger number, so the transaction fee as a percent is actually lower, and it's very tiny in comparison with other networks. Okay, so faster transaction times, and this is where it really helps the situation. Any institution that uses Ripple can expect to switch dollars or pounds or any kind of fiat currency between two locations very, very quickly. It wants to structure the network so that it can send transfers just about in real time. In other words, if you're on the phone to somebody and that person is across the world from you and you want to transfer money, the bank that is using Ripple will be able to send that transaction, and while you're still on the phone with the other person will say, it's here, and we're done. Okay, so Ripple's a lot faster. About 4 seconds is the average amount of time that it takes, and the transaction after it goes through the approval process takes 3 to 5 seconds to finally approve a transaction and have it be solidified on the blockchain. So the other transactions, like for example, Bitcoin takes 2 to 10 minutes to approve a transaction and carry it out. Ripple can process 1,500 transactions per second. So from beginning to done, it's 3 to 5 seconds. So it's very, very quick. Now, there's another figure there. It says compared to the traditional SWIFT, and I'll tell you what SWIFT is in another video, Ripple's a lot faster, providing settlement in about 4 seconds instead of 2 to 3 days. Okay, so I want to send money to a friend of mine in Paris, France, and I'm here in the middle of the United States. I want to send money over there, and let's say it's $1,000. It's a significant sum of money, so I send that $1,000. If I use the traditional banking system, it takes 2 to 3 days to actually get it there and to actually secure the transaction and validate that the transaction actually happened. Compared to Ripple, night and day. So I don't know how long networks like SWIFT are going to survive. The problem is that networks like SWIFT are self-perpetuating in that everybody that's a middleman in that SWIFT network takes a little bit of a cut of that transaction, and all of a sudden, instead of 0.0002 of a Ripple, which is only $3 at full cost, you've got as much as 4 to 5% of a transaction instead of just pennies on the dollar. So that's the main difference, the fast transaction time. So let's go on. the security is much, much higher. The problem with banks is that when it goes through so many middlemen, you have a hard time tracing and tracking the transaction through all of those middlemen. You've got middlemen in there that are not necessarily great at bookkeeping, but the fact that they're not so great at bookkeeping only happens because they have to keep track of a lot of transactions. It's just hard to find your little needle in a haystack when you need to say, well, the money didn't get there, where is it? You know, good luck tracing it through all the places that it went in order to get to its destination. So that's the main thing with Ripple, is the fact that they've really, really worked hard on making sure the transactions are secure. So banks that join the Ripple network, for example, they will purchase the XRP coin on the one side, and they'll put the money and exchange the money into the XRP coin, and then send it. And on the other side, they get the XRP coin and they convert it back to the type of currency that you want. So let's say I want to send to that person in France. I send $1,000. They take the Ripple and buy euros with it on that side and give it to the customer, because they spend euros over there, I spend dollars over here. And the transaction is very seamless because we've sent Ripple across the borders, but at each side, the native currency is what gets converted from the currency to Ripple, and then Ripple to the other currencies. So the exchange rate difference is a huge difference as well, okay? Now, the Ripple network has attracted 100 different financial institutions, continues to gain more partners, and we're talking partners like JP Morgan Chase, the largest bank in the world, and HSBC, which is the largest bank in the UK, and it keeps on garnering more and more people. The Ripple software is xCurrent. That is the software that the banks install, and so once the banks install it behind their firewall, it becomes part of their security system, and it is protected just as though any of the other digital transactions are protected within each of the banks. Okay. So Ripple really helped another situation with when decentralized finance started coming to be. Ripple was included in the decentralized finance experience, and because it had a decentralized focus on it, in other words, Ripple was an independent coin that was out there. Okay, because Ripple was an independent coin out there attached to the DeFi networks, what happens at that point then is that it contributed to the security and the speed of the distributed finance app, as well as XRP itself. So one thing about having a decentralized coin, and I've intimated this already, and here it states it in this particular article that I took, it says, one major factor is that centralized finance does not come with a guarantee. In other words, you send through the legacy systems from the midsection of the US to France, you don't necessarily have guarantees that it's going to get there. You might have a bank that'll stand up for it on your side and say, well, if it doesn't get there, we'll refund your money. But the bank still can lose between those 2 points and have to search for the money and really figure out where the money went and how it got lost. So the independent nature of Ripple allows you to get the money, verify it very quickly, and the decentralized nature of that helps with that whole process. So what we're hoping is that Ripple will, revolutionize the finance world. Now, because the legacy systems tend to be a little self-perpetuating, you're going to have a lot of those pushing back on, trying to say, well, Ripple's not secure, or Stellar's not secure, or any of these other things are just schemes and they're not valid. We need a good, strong system like SWIFT that's been around for decades. Well, things that have been around for decades need to be updated, and that's just the way life works. So what I want to do is stop here. And Robert, let's look at some questions, because I think I've got a couple questions here.
Are you able to read it from here?
Not completely.
I'll
I can see that there's questions. Esteban looks like he asked a question there.
Give your cat and mouse.
Okay. I think I would understand this much better if I could actually see you send money, perhaps to a student of yours in Oakville, Missouri. That's good. That's creative, Esteban. Maybe it should go the opposite direction. You send me a tip. One thing that I might say to this too, all joking aside, is that I don't know if you've not ever dealt with a how do I say it? Dealt with a worth a try. Yes, it was worth a try. Dealt necessarily with a Bitcoin transfer or a transfer of any other coin. Literally, you've got your handheld, your phone or maybe your tablet, and you've got your wallet app on the tablet, and you send money to somebody else. You literally see it a few seconds later being taken away from your account, and see the other phone or the other person with their device being able to confirm that they received the Bitcoin or whatever coin you sent. So, it's really quite seamless. It's kind of the way you would expect it to be. I know when I look at a bank transfer and I'm waiting for money to get to my bank, let's say I return something to Walmart, and if I really start watching my bank account, it takes some time for the money to get back there. It's amazing how quick the transfer goes to Walmart and how slow it goes from Walmart back. But you know what I mean. The transaction takes time, and everybody's paying along the way. I know when I took credit cards, when I had my own company, when I took a credit card, I remember I was dealing with Wells Fargo Bank. And Wells Fargo Bank, whenever I took a credit card from somebody, I mean, it's like they were in business with me. Their fees ended up being 10-15%, it seemed. It wasn't quite that exorbitant, but every single transaction on a credit card was this extra 2 to 3%, especially if it was a Discover card or a Master or a American Express card. Those two are by far the most expensive. And you don't hear of Diners Club cards very often anymore, but they were really bad too. MasterCard and Visa got their fees down, but their fees were still in the 1% to 1.5% area plus a fee. That's Paige, right? Okay. Booches is Paige?
Yes.
Yeah, Paige. Paige asks, and there's no transfer charge? There is. There's a transaction fee on every cryptocurrency exchange. So every cryptocurrency exchange, just like when I was highlighting the fees for Stellar and for Ripple, the fees are very low, but if you're transferring like Bitcoin or Ethereum fees are actually higher than Bitcoin now, and they're seeking to solve that by changing the type of consensus method, going from proof of work to proof of stake in their consensus method, so that they can keep their costs low and pass the less cost on to the user. So someone is making a little something in the process. Yes, very definitely. For Bitcoin, it would be the miners, because the miners get a small fee for closing a block that is constant for about every 4 years, and then it goes in half. Plus, they keep all those transaction fees along the way. And the Ethereum network was getting so clogged up and so many transactions that miners were starting to bid the fees up in the Ethereum network to the point where it was just horrendously expensive to send anything. They call their fees, gas fees. I don't know where that term came from, but They called them gas fees, and they were really expensive. Do I know who has the lowest fees? I really don't. I really don't know who has the lowest fees. I generally work on an exchange, and I'll send money to and from other wallets just from my exchange, and Coinbase has the same fee whether I send Bitcoin or whether I send any other coin. So I'm not quite sure really which network has the lowest fees by percentage at all. All right. Do we have any other questions? Tell you what, let me go ahead and take that 2-minute break that I usually take, and I can rest my voice, and you guys can come up with more questions also and post them, and I'll see about answering them when I come back. So we'll see you in a couple minutes, okay? Okay. Well, we do have a couple interesting questions here. So Paige says, might be totally off topic. What makes something like Bitcoin successful long term, but something like Dogecoin not? I guess my question is, what does a cryptocurrency need to be successful long term? First of all, Dogecoin was a joke. Okay? Dogecoin was meant to be a joke and never meant to be a serious coin. There are no projects being built on it. It's just out there. It's basically what it was when it was first built and first sent out there. I don't know why Elon Musk is so enamored by it, but frankly, it's just it's a joke coin. So that one is kind of hard to compare against. I think what really you have to do is is, does the coin have a good set of use cases? Does the coin literally have a direction and a focus? Like Ethereum, the whole point that Vitalik Buterin, the founder and creator of Ethereum, wanted to do is he wanted to provide a platform for other people to create meaningful applications. What he saw was, he saw Bitcoin as being a, just kind of a, okay, that's nice that it's there, but what are we going to do with it? You couldn't build anything on Bitcoin. You couldn't add to it. You couldn't extend it. It's just there as a currency. It's just there as an investment. And frankly, it hasn't even stepped over the line to be a currency, because it's not really accepted as something you can pay for, except in countries like El Salvador that have made it the currency of record for their country. So what makes a coin good, I really think, is the fact that it's got good projects, a good firm use case and reason for being is why a currency would be successful long term. And frankly, if you go to a place like CoinCap.io, you can see they've got listed well over 2,000 currencies, and it doesn't take you very long. You get through the top 20 and you realize that ones below about the top 20, maybe 25, don't have enough of a use case to even have a market cap that's worth even talking about. Good 45% of the entire market cap on cryptocurrencies belongs just to Bitcoin, and a majority of that that's left belongs to Ethereum, and then everybody trails off from there. So it's the desire to have a use case. It's the need to have a use case that makes a good currency. So let's see what Juan has to say. He says, yeah, as an international student, I've had to deal with bank transfers from 2 different countries. And I noticed how hard it is to send and receive money with respect to time and price. Yeah, so correct. If your folks could get a Bitcoin wallet and be able to, you on your side, buy currency, or their side, whichever way you're sending it, buy Bitcoin with the currency and send it to you, you'll save time, because it'll take maybe 10 minutes to send a Bitcoin transfer, and you will save a lot of money, time and money. And that's 2 big deals. Yeah, blockchain transfers get done almost in an instant, even between 2 different wallets, like Coinbase and to Binance. Exactly. So, you get a wallet on Coinbase, you could transfer that money really easy. You just have to have a wallet address to do it. So, very, very good observation there. Andrew asks, do you think the technology is there to put a platform like YouTube completely run on a blockchain? Yes, I believe that's the case. It would be really, really nice to have that. There is an experimental blockchain right now called LensTube. So we've got YouTube and we've got LensTube. Now LensTube is on the blockchain, and it right now it's so far from being deployed that it's really in either alpha or beta release. And I tried to get into it the other day, and they wouldn't even allow me to create an account on the platform yet. So there's a lot of videos about flowers and a lot of fluffy stuff that most people don't care about on LensTube right now. But once they get done with their testing and everything, hopefully they'll get to the point where you can actively have a YouTube alternative that's on the blockchain and own your videos and be able to prove ownership of those videos, which will be nice. Also, the transaction of ads where a person displays it and is reimbursed. Absolutely. I know if you use the BAT, B-A-T, cryptocurrency, if you use the Brave browser, every month you can earn BAT by looking at ads. So you are paid for watching the ad, And if the, of course, the advertiser is paid if you buy their product, just like ads normally work. But if you use the Brave browser, you can tap into that. And I make like $3 to $4 a month. It's really passive income. But I'll click on an ad as it pops up when I'm at my computer and, earn a passive $2 or $3 a month. And after a while, the dollars add up. So that's one way to get reimbursed for your activities in relationship to ads. In connection with the YouTube question, do you think this would mitigate bots and bots on other platforms? Absolutely. The latest we've heard from the Twitter fight between Elon Musk and Twitter is that the bot responses. Now, we're not talking number of bots as a percentage of users, but now we're talking about the number of posts done by bots versus real users, and they're estimating the figure could be as much as 85% of the responses now are bot driven rather than user driven, which doesn't make the platform very useful, and it can obviously drive a lot of opinions based on what the programmer or what the advertiser or whoever's behind the bots want to drive, rather than what people are saying. So that's an interesting question, and yes, I would very much hope for a blockchain driven Twitter type of a platform at some point. Juan says, actually, Binance has been growing a lot lately in South America. Okay, good. Since it is allowing countries to have easier transactions between countries by using stable coins and change it to their currency. Absolutely. That's literally the whole point of a distributed finance type of a system, where you can have one wallet to another wallet, buy one coin here, transfer it over there, and buy the other currency on the other side. Yeah, it's a lot of good work being done there. Okay, Robert, why don't you take the screen down, and I'll get on with the last part of our presentation. Okay. So I kind of powered through everything, and so as soon as Robert gets everything moved, I'll actually get started. But we've talked. I'm going to take a deep breath. We've talked a little bit about Swift along the way, and Swift, I felt the need to be able to share what Swift is all about. Okay, now let me get my cursor up here so I can change. There we go. Okay, first of all, what is Swift? Swift stands for the Society for Worldwide Interbank Financial Telecommunications. Neat. Okay. So it was founded in Brussels in 1973. So it looks like it was founded about the same time as the European Union got started. It established common processes and creates standards for financial transactions. Now, if you're aware, back in 1973, digital banking wasn't hardly even thought of. It's not until the 1990s that you actually get the internet. So literally, you're still at 1973 walking to a bank, depositing your money in a savings account. You hopefully have a checking account, and you're writing paper checks still and giving them to vendors. Debit cards were not a thing. It was just checks. And electronic transfers, no. You still picked up your paycheck from the boss and walked over to your bank and deposited it in your bank. So we're talking, as far as today versus them, very, very archaic systems. And what needed to take place at that point in time was an organization that could put some standardization into the system so that banks could actually talk to each other. There were check clearinghouses that would clear checks and then electronically deposit into the various banks, because there were computers. I mean, the computers filled whole rooms and barely did as much as the phone that you have in your hand, but there still were computers, and they still transacted back and forth electronically. but at this point in time, they were probably still working by teletypes. And teletypes is kind of like the precursor to the fax machine, if anybody knows what a fax machine is out there. The teletype literally sent data through telephone wires, thus the term teletype. And through the telephone wires, you had a machine on the other side that would actually type out instructions. So literally during this time of the world, you had financial transactions being done by these teletype machines. So you had a human at the other end receiving these long strips of paper, having to read off all the transactions and then physically record them on the other end. So, I mean, it was labor intensive, incredibly labor intensive. And there needed to be some standardization of this system before it entirely collapsed, or we just stayed in the dark ages and never really transacted. Because you got to understand, in 1973, the tech revolution is just beginning, and all of a sudden things are starting to speed up like crazy. Now you're starting to get television communications, you're starting to get color TVs. That was probably in the 1950s. You start getting color TVs, the widescreen TV, those big, huge boxes that you would be able to watch in your front room, finally started coming into being, so you could actually watch a decent football game. So that's what SWIFT initially started out to do, okay? And so the SWIFT network, about the second half of the 20th century, 1973-ish, they were relying on those telex transfers. Banks from the world got together and wanted to create a consistent universal solution for getting money moved between different countries. So it was one thing to send bank information within your own country, across town, across cities, to the next state if you're in the United States, or next province if you're elsewhere, that type of thing. It was one thing to do that, but all of a sudden, what happens if you wanted to send it from the US to France when they spoke a totally different language? How were you going to enable a consistent process to get money transferred? You can probably imagine, Juan, your questions probably bear this out, in the fact that when you transferred money from the US, let's say, to a Latin American country or South America, probably was a bit of a challenge to get the money securely sent to a loved one if you needed to do that. So what SWIFT provided was a secure network. Today it has 11,000 financial institutions in over 200 different countries that send and receive information back and forth from country to country and bank to bank. Okay, so here we've got a situation where SWIFT came to be. Now comes up the war in Ukraine. We have an aggressor, if you want to call him that, in Russia, that's attacking Ukraine, trying to take territory. And what they do is they decide as a world consortium to turn off SWIFT for them. Okay, so Russia can no longer transfer money through SWIFT. Now, SWIFT over time became the only way to send money during much of the time between 73 till now. The challenge with that is that if you became, an aggressor on the other side like Russia is, and you get turned off from SWIFT, how do you then transfer money that you already had in another country back to your country? How do you pay for goods and services that you want to buy for your country and bring it to your country? All of a sudden, you couldn't import anymore. You couldn't export anymore and get payment from the country that wants to buy your product. All of a sudden, your ability to transact just went away. Okay? So that's what SWIFT is all about. That's the ramifications that SWIFT created. And so the next subject, let's move on to the next one. We have a thing called CIPS. Now, what's that? Okay, it is another SWIFT. Okay, so you have countries that are on kind of on the other side of the fence from Western developed countries versus Eastern. So you have China, you have North Korea, you have countries that are not necessarily in the good graces of the Western countries like the UK and the United States and other countries that have large economies. So what do? Well, in 2015, China could kind of see the writing on the wall that they could end up being on the outs when it came to international banking. So they began in 2015 to create the Cross-Border Interbank Payment System, or CIPS. Now, CIPS does the same thing SWIFT does. It provides a payment clearing system for banks that are going from offshore to onshore or one country to another country. So CIPS is the competitor now to SWIFT. So CIPS, now you've got Russia getting into CIPS, and now they can keep transacting with China, they can keep transacting with North Korea. They're, probably not as happy as they would if they could contract and send payments with Europe, because Europe generally isn't part of CIPS, but there are banks here and there throughout the world that are part of CIPS as well. So what you've got is a crack in the armor. We want to isolate Russia, but we can't really, because SWIFT isn't the only ball game in town. So you've got the cross-border interbank system. Now, what happens? What happens when you have cryptocurrencies and wallets that all it takes is getting a cell phone, creating a wallet, downloading the software for a wallet, creating your wallet, and all of a sudden you're back into intercompany banking again. Cross-border banking made simple. So there's the threat to the current banking system. All of a sudden you've got oligarchs and heads of countries and Federal Reserves around the world that all of a sudden can't control the flow of money. And you believe me, that kind of is irritating to a lot of those people who would love to control how swiftly or completely money flows from one place to another, just like trying to control how Russia can spend money. So the origin of CIPS came about in about 2009 when they created their Belt and Road Initiative. Now that was an initiative to try to create travel and traffic lanes between them, China, and other countries. It was when they started really reaching out and trying to become international in a much, much bigger way than they had been in the past. So over the last 14 years, you've seen China hugely expanding their economy and hugely expanding their reach throughout the world, and that was the Belt and Road Initiative, and they needed CIPS to enable that with some of the countries that weren't part of SWIFT, because there are some countries that are not part of it. Okay, so banks signed on to phase one. Now look at the list of banks here. We got Standard Chartered, we got Deutsche Bank, so a German bank. We got a HSBC, which is a UK bank. We got Citibank, which is a US bank. So you see what's going on here. They've already connected a lot of countries, banks, to the CIPS system. So there are cracks in that armor, and if you can't control what these banks are doing, you lose control of the ability to stop that flow of money back and forth. Okay? So that's the end of that presentation, and it looks like we got a ton of questions. So Robert, if you can handle questions up there for me.
Sure, let's see if I can bring it back over.
You might have to do a bunch of minimizing. There you go. There, you got it. Okay, so let's answer some questions, because I know time is running out. What time is it, Robert?
It's 1 minute till, so read fast.
1 minute till. Okay, let's see. Blockchain transfers.
The last two.
Last two. Is SWIFT what is still used between countries for currency conversion to import and export other companies' goods and services? Oh, yes. Boeing in particular uses SWIFT all the time. I work in finance in Boeing, and I create finance systems for Boeing. And one of our types of financial exchange or transaction exchange is a SWIFT account. And we've got a certain SWIFT number that is used in order to interbank between our U.S. banks and Germany, for example, where we have a lot of different locations, and all over Europe, where we provide parts for airplanes. So, okay, just answered this question. Never mind, just answered the question with SIPs. So I've heard about SWIFT before, but it is the first time I see SIPs. Is it still a thing today? Oh yeah, it's bigger today than it was before the Ukraine war. And it is just exploding because what you've got is a financial war out there. China does not want to be beholden to the US dollar. SWIFT is a US dollar based system. And if they can get SIPs running, they can trade in the yuan or any other. What they've done is they've made it so that they can trade in any other type of currency for whichever country is involved in SIPs. Back in the 70s with the Bretton Woods Agreement with Nixon and all things that were going on and the dollar, a lot of agreements were put in place that there would be a petrodollar. In other words, oil would be traded totally in dollars. They're breaking loose from that by going to SIPs now. And this SWIFT is another example of a totally dollar-based system. So still a thing today, yes, and it's going to keep growing as a competitor to SWIFT simply because people want to wrestle themselves away from the dollar, which isn't necessarily a good thing for the U.S. economy, but that's another topic for another day. I really appreciate everybody here. Post that thing so everybody can say goodbye, and post up there and let me know that you're still here. And once you do that, we'll see you later, and do great jobs on your homework, and we will see you next week. So please be sure to post. I want to give everybody the second half of their credit. So good. Paige, Lindsay, Sydney, good. All righty. We'll see you next week, guys. Keep posting until you've got your post, and then we'll see you later.